Welcome to the channel, folks. Buckle up because we're in for a wild ride today. The markets are in a frenzy, and we're breaking down all the major news you need to know. We're talking about inflation throwing a wrench in the gears, tariffs sparking international turmoil, and crypto taking a roller coaster ride. You don't want to miss this. Welcome to our channel. Today, we're diving into some major financial news that's shaking up the markets. From stock market declines to crypto controversies, we've got it all covered. Let's get started. Listen up, because this is important. You need to understand what's happening right now. The US stock market just took a hit, and we're talking about a serious blow. It's not just a minor dip, it's a significant downturn. Why? Inflation, my friends, inflation. It's the silent thief that steals your purchasing power. It's the boogeyman under the bed, and it's rearing its ugly head. Investors are feeling the heat, and it's not looking good. The latest data came in hotter than a firecracker, and investors are running for the hills. They're scrambling to protect their assets. We're seeing red across the board, folks. It's a sea of red, and it's causing a lot of anxiety. The Dow Jones Industrial Average, that bellwether of American industry, plummeted over 700 points. That's a massive drop. Can you believe it? 700 points? It's almost unheard of in such a short time. That's not a dip, it's a full-blown plunge. Investors are in shock, and the market is in turmoil. And don't think the tech-heavy Nasdaq is immune to this carnage. It's feeling the pain too. It got hammered too, down a hefty 2.7%. That's a significant loss for tech stocks. These are serious losses, folks, and they're a clear sign that investors are worried. They're worried about the future. Worried about what? Worried about the economy, that's what. The uncertainty is palpable. The S&P 500, that broad measure of the market, didn't fare much better, shedding nearly 2%. It's a broad-based sell-off. This tells you that this isn't just a few sectors taking a hit, it's a widespread sell-off. Investors are pulling out across the board. Investors are jittery, and they're not afraid to show it. The fear is real, and it's affecting decisions. You see, inflation is a killer. It doesn't just affect prices, it affects confidence. It eats away at your profits, it erodes your purchasing power, and it makes it harder for businesses to plan for the future. It's a triple threat. When inflation is high, the Federal Reserve steps in and raises interest rates, and that, my friends, can put a real damper on economic growth. Higher rates mean higher borrowing costs. So what does this all mean? It means we need to brace ourselves. It means we're in for a bumpy ride, folks. The market is going to be unpredictable. The market is volatile. And there's a lot of uncertainty out there. But don't panic. Stay calm and think long-term. Stay informed, stay diversified, and remember, in the long run, the market always goes up. Patience and strategy are key. Hold on to your hats, folks, because the drama isn't confined to US shores. Our friends across the pond are making some big moves, and they're not exactly bullish on America. European investors, those savvy financiers, are starting to pull back from US stocks, and they're doing it for one big reason: trade tariffs. That's right, those pesky tariffs that have been looming over the global economy are finally starting to bite. European companies are feeling the pinch, and investors are getting nervous. They're looking at the US market and seeing a lot of risk, and they're not sure the potential rewards are worth it anymore. Meanwhile, European stocks, particularly those in Germany's mighty DAX index, have been outperforming their American counterparts. It's like they're saying, hey, we're doing just fine over here without all the drama. And you know what? They might have a point. Now, before you go dumping all your US stocks, let's be clear, this transition is still in its early stages. It's not a mass exodus yet, but it's definitely something to keep an eye on. If more and more European investors start heading for the exits, it could put downward pressure on US markets. So, what's the takeaway here? Diversification, diversification, diversification. Don't put all your eggs in one basket, especially when that basket is looking a little shaky. Spread your bets, folks, and consider adding some international exposure to your portfolio. You'll thank me later. Hold on to your hats, folks, because this one's a doozy. We're diving into a story that has all the makings of a political thriller. Remember all that talk about draining the swamp? Well, it seems like the swamp might be deeper and murkier than we ever imagined. Some familiar faces might be up to their necks in it, and this time it involves the wild world of cryptocurrency. Yes, the digital gold rush that's been making headlines. Senator Elizabeth Warren, that fiery champion of the people, is sounding the alarm, and she's not alone. She's rallying her colleagues to take a closer look. Democrats are up in arms about a potential conflict of interest involving none other than President Trump and his family. The stakes couldn't be higher. It seems they're involved in a cryptocurrency project called World Liberty Financial, and let's just say it's raising some eyebrows. The project has ambitious goals, but at what cost? Now, I'm all for capitalism and free markets, but this situation stinks to high heaven. The potential for misuse of power is enormous. We need transparency, folks, and we need it yesterday. The American people deserve to know the truth. The American people deserve to know if their elected officials are profiting off their positions of power. It's a matter of public trust. And here's the kicker. World Liberty Financial is planning to launch its own stablecoin, USD1. This could have far-reaching implications. That's right, a digital currency pegged to the US dollar. It sounds innovative, but it also sounds like a potential minefield. Now, I'm not saying there's anything inherently wrong with that, but given the circumstances, it certainly raises some red flags. We need to be vigilant. We need regulatory oversight, folks, and we need it now. The rules of the game must be clear and enforced. The cryptocurrency market is like the Wild West, and it's time for some law and order. We can't let it become a free-for-all. We can't let powerful individuals play fast and loose with the financial system. The integrity of our markets is at stake. So, what's the bottom line? We need to stay informed and demand accountability. Keep a close eye on this one, folks. The story is still unfolding and new details are emerging every day. It's a developing story with the potential to rock the boat. The implications could be far-reaching and significant, and if you're thinking about investing in any Trump-linked crypto ventures, I'd proceed with extreme caution. The risks are high. Remember, when it comes to politics and money, things are rarely as they seem. Stay vigilant and informed. Attention, investors! The financial world is buzzing with anticipation. The Middle Kingdom is making moves, and this time, it's all about the stock market. China is stepping up its game in a big way. China, that economic powerhouse, has decided to reopen its IPO market, and it's sending shockwaves through the financial world. This decision is monumental. After a long hiatus, Chinese companies are once again allowed to file for initial public offerings, and let me tell you, the excitement is palpable. Investors are eagerly watching every move. This is a big deal, folks, and it could mean a fresh wave of capital flowing into the Chinese economy. The potential for growth is enormous. Now, before you go pouring all your money into Chinese stocks, let's take a step back and analyze the situation. It's crucial to understand the broader context. This move is part of a broader effort by the Chinese government to boost their economy, which has been hit hard by the global pandemic and trade tensions. The stakes are high. They've been rolling out policy measures left and right, including initiatives to support the stock market. These measures are designed to instill confidence, and you know what? It seems to be working. The market is responding positively. The Chinese stock market has been on a tear lately, and this IPO announcement is only adding fuel to the fire. Investors are riding the wave. But here's the million-dollar question. Is this sustainable? Can this momentum be maintained? Is this a sign of genuine economic strength, or is it just a temporary sugar rush? The answer isn't clear-cut. Only time will tell, folks, but one thing's for sure. China is a force to be reckoned with, and they're not afraid to play hardball in the global marketplace. Their strategies are bold and calculated. So, what's the takeaway for investors? How should you navigate this landscape? Keep a close eye on China, folks. The developments here could have far-reaching implications. This is a market with enormous potential, but it also comes with its fair share of risks. The opportunities are vast, but so are the challenges. Do your research, diversify your portfolio, and remember, fortune favors the bold, but it also rewards the prudent. Stay informed and make calculated decisions. Fasten your seatbelts, crypto enthusiasts, because it's about to get bumpy. Bitcoin, that digital gold standard, has taken a nosedive, falling below the $84,000 mark and wiping out its weekly gains. Ouch! That's gotta hurt. And it's not just Bitcoin feeling the heat. Ethereum, the smart contract king, is also reeling, hitting its weakest price against Bitcoin in almost 5 years. What's going on here? Is this the beginning of the end for the crypto craze? Well, before we sound the alarm bells, let's take a deep breath and analyze the situation. The crypto market, as we all know, is notoriously volatile. It's prone to wild swings, driven by speculation, hype, and yes, even fear. And right now, there's a lot to be fearful about. The global economy is facing some serious headwinds, from inflation to supply chain disruptions to geopolitical uncertainty. And when the going gets tough, investors tend to flee to safety, dumping riskier assets like cryptocurrencies. So is this a blip on the radar or the start of a prolonged crypto winter? It's too early to say for sure, folks, but one thing's clear: the days of easy money in crypto are over. The market is maturing and only the strong will survive. If you're invested in crypto, buckle up and prepare for a bumpy ride. And if you're thinking about jumping in, proceed with caution. This is not a game for the faint of heart. Remember, invest only what you can afford to lose and never bet the farm on a single asset, no matter how promising it may seem. That's all for today's financial update. If you found this video helpful, make sure to like, subscribe, and hit the notification bell so you never miss an update. Thanks for watching, and we'll see you next time. This is not financial advice. Always do your own research.